I wanted to touch on, you brought him up. Let's go ahead and talk about billionaire CEO of IBKR, Interactive Brokers, Thomas Peterffy, who had two things to say this recently. The first one is here, we can see on the screen. So over the last 3 months, our margin loans are up 16%, um, and which is rather, it's a bit, if you ask me, because I think that equity prices are somewhat overextended, and I hope that as they come down, they will not come down too fast, so we can liquidate as it happens. We will not end up with holding the bag. So basically, people are so levered up with the markets. He's sort of like advising um, other institutions to be like, "Hey, we maybe be careful with how we're extending margin because people are like over levered, and if there's a market correction event, um, it could be pretty significant." I just want to play here a small clip from him on Bloomberg that talks a little bit more about what I want to hit on.
Let's do it. And I want to call this potential risk out on the crypto market as well. I think the amount of futures trading and levered trading that exists in crypto now presents a similar risk if we start seeing a pullback in crypto.
Agreed. All right, so let's take a look here.
If you have one area that investors should look at for next year, the biggest risk on the horizon, everyone is talking about so much growth and soaring stock markets. You mentioned you're worried that you could actually see a downturn, which is contrary to what everybody else is out there saying, right? Many people are out there saying right now. What's the biggest risk on the horizon?
So a downturn is a very big risk because margin balances have been growing very, very quickly. And especially if you take a thing like Bitcoin, I mean, if margins on Bitcoin futures, for example, charged by the CME are extremely low. So I am very worried that people overextend themselves. A sudden hit comes into the market and Bitcoin falls, say, 30, 40, 50% from one day to the next. There'll be many bankruptcies. The clearinghouse will be unable to pick up the pieces, and it basically will, the bad debt will be transferred to the clearing members. So this is a difficult situation if it happens. Now, the probability is not very high that it will happen, but it certainly could happen. So I wish that everybody please pay attention to these situations and try to take preventive measures and do not extend margins so easily.
We don't hear from this guy a lot, right? He's not one of those people who is going around trying to drum up traffic, let's say, for Interactive Brokers. That's not been the his MO. You'll correct me if I'm wrong, but I don't. I've been looking for him and I don't see him like everywhere. He pops up every once in a while, and
Yeah, he's not like he has a huge following on Twitter or anything. This isn't a random or a daily news kind of guy. I'm with you on that.
that's right. And that post that was up there, where he was talking about the margin issues, he took down that post afterwards. It's
I
got
was
too much traffic.
wondering why I couldn't find it before the show
Yeah.
here. Yeah.
It disappeared, and so that to me is sus, right? Someone says something like that initially, you're like, okay, maybe they're looking for clout. They take it down afterwards, it means they said some truth that they're looking to hide. I mean,
Where
that's the
was
assumption
that
that I have.
post originally, by the way?
It was a quote from it wasn't on Twitter. It was I forget exactly where it was. I think it was a Discord channel that someone was referring to that, but then that person took down that post afterwards.
Oh, so
But we
we
can
don't know
find
if
the
it was
quote.
actually him that typed that.
Well, it's someone transcribed what he said.
Oh, I see.
Yeah.
In what was the source of his statement? Oh, okay.
Well, that's why I went to go get this other video of him on Bloomberg,
Yeah,
and
yeah.
he is saying something similar.
Similar.
Uh,
Yeah. That makes
yeah.
sense. So yeah, I mean, just from the warning that he's issuing here is a margin warning, which interestingly enough, I mean, this story is as old as markets. Even the smartest people on the planet get trapped by margin from time to time. They get slapped in the face by getting overextended in their positions. I remember I follow Ernie Chan, who's a great quant in the space. He runs a fund as well as a platform called Predict.ai. Great guy, super smart. And he has a strategy called the Tail Reaper, which at the time that they began running it in 2011 or 2012, I can't remember the exact year, they they saw it was so successful that they ended up going 7x leverage, 8x leverage, something like that. They just kept levering it up because it was working so well. And then for the first time in U.S. history, the U.S. bonds had been downgraded from AAA to AA rating, and that absolutely crushed them. I think they had something like a 35 or 36% drawdown in a very, very short period of time, which took out most of the performance. And if you're looking at 35 or 36% drawdown on a leveraged account, that's a pretty large sum. So I think the warning is worth addressing. Everybody feels like they're brilliant in a bull market, and that's exactly the time to be prepared for that downside risk, because when it happens, especially when margin use is higher and higher, I just think that breakout volatility event is pretty extreme when it does occur.
So this is a shortcoming I think I have within my arsenal, where I don't have any strategies set up that are only waiting to trigger based on massive volatility moves within the markets. And I think I should be setting stuff like that up, because it's one thing to be like, okay, we're looking for it to happen, but there is no better buying opportunity than at the lows of COVID, at the lows of Brexit, at the lows of GFC, and these are life-changing trades. So I'm always like looking for the drop, because that's historically where I've made money, like waiting for the drop on the other side.
Mhm.
But to have something that could pick up, limit orders, just waiting at certain levels, like rock bottom, where it's only there, those candles, it's only there for an hour. And you go, you bottom tick that? Like, yeah, I bottom tick COVID. Like, that would be unbelievable to write that trade. And then you don't need any leverage, you don't need any risk, you don't need any options or anything like that. You can just ride this thing back up 100% as they try to buoy the market. So I think I gotta set up some strategies like that, both in crypto and in TradFi, in order to get that going.
Yeah, and I think that the signal is a bit counterintuitive. It's not a spike in volatility that's your signal. It's all-time highs and really low volatility. That
That's
should
right.
be your initial signal to wonder if you should start de-risking, or at least be paying attention to what's happening in the market. Is there still room for upside, or are we in extreme greed? One of the indicators I like to use is the one from my friend Jason Meshnick, who came up with the Fear and Greed Index on, I think it's still on CNN's website. And right now that indicator is at neutral, which, normally in a very extreme condition where we're really seeing prices move higher and higher, that extreme greed signal would be an area where I'd be paying attention. So it's nice to actually see it at neutral as of today. Because that kind of gives me some comfort that we could still see some potential upside through the next couple months.
I see. So you found this to be accurate? This is the first time I've ever actually seen it.
I got to be honest, I've never actually tested this against the historical performance or forward-looking performance of the S&P 500, but I can say that it's accurate in its current measurements.
Understood. Well, the other thing that the CEO was saying was that, and I believe he was saying this, that 70% of the volume through Interactive Brokers is happening on the Mag 7.
That sounds right.
Which
I
is
mean, we see that even
crazy.
here at TradersPost. We're aware of what symbols come through our platform, and for the most part, it's exactly what you think it is. Whatever symbol you think is popular right now, that's the one getting traded.
Okay, so, well, we don't have, I guess, as much history in Traders Post to know if this is a worrisome outlier. If everyone's on the one side of the boat, I'd expect a more even distribution across, not even, but more of a bell curve distribution. Because to me, it seems like 70%. And he was saying this as a warning, like, this is not what we don't usually see this. And oh, by the way, you other clearinghouses, you're not charging enough margin. Like, this is gonna be a problem. We're not gonna be able to handle it. He says if there's a
Sure.
liquidation event of 30 to 40%, we're screwed.
Yeah. I think the fair call out here is that when those warnings start happening, there could still be months of continued upside before those warnings actually start to make sense.
That's what drives me crazy.
I'm with you. That's timing markets is incredibly difficult. So while his warning makes sense, the Shiller PE is concerning. Potential overbought conditions are concerning. We may still see a market move that heads up another 10, 15% from here for equities, and potentially another 20 or 30% on crypto.
So that's where Kim Carson to me is my hero, because he not only provides context for all that, but he goes, if it's going to happen, it's probably going to happen around these periods of the year. And so me, it's
Sure.
like I'm worried about March,
Yeah,
September.
seasonality I think can play a role. So it's definitely another one of those like, okay, where am I at in the calendar? Where are we at in seasonality? That's always helpful. Maybe that's a follow-up we should do on our next after hours, is just trying to bring in some of the seasonality of historical trends.
Good idea. Okay.